Welcome to Real Turkey channel. You know where you are. You know what we do here. We comment about Turkish affairs at large, be it the economy, politics, financial matters. We're fairly flexible about the range of our coverage. Today I'm going to talk about Turkey's real estate bubble. It's really becoming very Las Vegas-like. And I'm asking the question whether it is on its last legs. Is it going to implode anytime soon? I was inspired to shoot this video by an article in Financial Times. Let me show here. Let me show it here just a second. As usual, I'm very clumsy with this stuff. By Mr. Leo Lewis, titled Chinese Economy is Looking at a New Wave of Japanification. It's fairly scary, actually. And when I read the article, I immediately thought of Turkey because Turkey also has a huge real estate bubble. And already it has economic difficulties, as you know. We're dealing with the economic impact of a really devastating earthquake, actually several earthquakes in the south of the country, which may cost $100 billion to make whole. Interesting that the disaster in the earthquake zone has added another motivation to drive home prices higher, simply because people migrated from the area and the rich ones among them were looking for new shelter, housing in the other cities. For instance, in the neighboring city of Mersin, but as well as in large cities like Istanbul, Ankara, Izmir, where almost everyone has a relative. Let me just see if I can. No, I cannot. So my headroom is slightly high, but hey, again, I'm not a professional YouTuber. Secondly, the earthquake in the south of the country has suddenly compelled people to remember that the entire Turkey is on an active fault line or on a crisscross of tens of different fault lines, which may trigger new earthquakes again. So in addition to this spillover demand in housing from the earthquake zone, house prices are also rising because everyone is relocating in large cities, hoping to find a house or an apartment that was built strong enough to resist an earthquake with the force of 7 or higher in Richter scale. If you look at my previous videos, the last one for instance, you would see that the earthquake was really truly an unprecedented disaster. It may have caused the collapse of up to 500,000 units. These are obviously, some of them are in apartments, so the total number of buildings that collapsed could be lower. A lot of it was unavoidable, but a huge portion of damage came from the fact that Mr. Erdogan's AKP governments have declared real estate amnesties time after time, which means if a home developer has built an apartment or a standalone house that's substandard, that's not strong enough to withstand earthquakes, it was amnesties in return, amnestied in return for a small fee that developer could be granted a deed, an ownership certificate, and suddenly he or she could sell these units, making huge profits. The last one was the most comprehensive. I think it has amnestied up to 500,000 different units and raised 2.4 billion liras for the treasury. This was in 2018, as I've said. So this is the background, and let's get back to our subject. First, I want to remind our readers what happened in Japan and how China today is similar in a way. Talk about the global real estate market for a couple of seconds, and then give you some data about how fast Turkey's house prices are increasing And then I move on to the conclusion section, where I'm asking the question, could Turkey face the fate of Japan and China? And then, of course, the timing. If so, when? What could be the implications for the economy? I remember 1980s very well. I was a college student in Japan. Well, I was a college student in the United States, and Japan was a powerhouse. It equaled the German economy at its zenith. Today, there are a lot of comparisons being made about Japan and China, but unlike China, Japan produced high quality, high value added manufacturing goods, and it was moving into high value added service industries. In 1980s, the political discourse in the United States was about how Japan would soon overcome the American economy, and it was also investing heavily into American real estate and other productive assets, and Americans were truly afraid, of a Japanese takeover. And in fact, the first trade wars that I can remember in modern history began not between Trump and Mr. Xi Jinping in China, but between Mr. Trump and his counterpart in Japan in the 1980s when Reagan threatened to sanction auto exports by Japan to the United States, and they reached some kind of convoluted quantity limiting deal. In 1989, Japan's real estate bubble burst, as all bubbles burst. I'm not going to give you the reasons, there's always a different reason, but the price of nothing can go up forever. It just doesn't make sense. And then when it burst, Japan pretended the problem didn't exist or it was temporary. It would heal itself by people again buying houses at very inflated prices. It refused to deal with the bad loans problem in the banks as a result of, this collapse in home and of course in commercial property prices. And the entire economy calcified, which meant that it lost its ability to grow and rejuvenate itself because the banking system was full of bad loans. They didn't want to write them off. The state didn't want to acknowledge the fact and force the banks to write them off, as a result of which they didn't have really the assets to make new loans. So, potentially very productive companies that could grow into giants were starved of financial resources, and that added mightily to Japan's deflation, which probably ended somewhere around 2022. Now, China is in a similar situation. Let me show you the FT cover once again. This is by Leo Lewis. It's called Chinese Economy is Looking at a New Wave of Japanification. Why does he think so? Let me recite a passage from the article. Never mind the first sentence. New research suggests that if it's not careful, China may be on track for a new wave of Japanification. Back in 2003, Japan could no longer fool itself that all was well. The 1990s had pitched the country of a trajectory on which it once seemed capable of overtaking the US. Its subsequent mishandling of the bad loan mountain, built during its 1980s vainglory days, put paid to the notion that the country could easily recover. And then Mr. Leo Lewis goes on to argue that China today is very similar to Japan, with which I agree. China's house prices collapsed somewhere during the pandemic as a result of the Chinese government imposing severe lending restrictions in home developers and home sellers, as a result of which many defaulted. You might have heard the case of Evergrande. Even today, China doesn't know what to do with this problem. House prices continue their decline, and units sold are also going down as well. The banking system is overburdened by loans made to these home developers with there is no prospect that these ever will be repaid. Houses were the number one wealth item for Chinese citizens, so there is a huge negative wealth effect. I think Mr. Xi Jinping still fools himself thinking that eventually the problem will solve itself because of migration to urban areas, population growth, which may not exist at this point, by the way. But I think that's foolish. Experience from all over the world suggests that once a housing bubble crashes, it either never recovers or, as in the case of United States in 2007, the mortgage crisis, it takes about 10 years for home prices to recover. In the meantime, this dead housing stock and the people who are heavily burdened with mortgage payments are a drag on the economy. It pulls down economic growth. So I think this is the fate that Turkey is facing. 2022 and 2023 have not been very kind to the housing markets across the world, as you know, led by Fed, European Central Bank, Bank of England, are pursuing tight monetary policies, which tightens financial conditions, which means it's becoming very difficult to get financing either for building commercial property or for mortgages. As a result, obviously it depends from country to country, but it's fair to say that global home prices are expected to decline by 10% in dollar terms in 2023. Of course, it will eventually recover because the world population is growing, but how long it will take before the price of an average house or apartment unit catches up to its previous peak needs to be seen. In my view, no less than 5 years. Now, Turkey is one of the outliers going against the trend. Turkish house prices soared in 2022, a trend that goes on in 2023. Let me show you why I think this is a housing bubble of biblical proportions. The charts are in Turkish. This is the official home price index by Central Bank of Turkey. The red shows the annual price increases in nominal terms, and the black shows inflation adjusted home price increases. God, look at it. I mean, in nominal terms, home prices rose close to 200% at one point. I am sorry, my voice is fading here. In inflation adjusted terms, home prices increased by 60% or so in 2022. Now, since the Turkish lira appreciated against the dollar in real terms, actually Turkey's house prices increased by roughly 80% in dollar terms. 80%. Now, the house price index by central bank is not the only one. When I use official data, I'm always skeptical in Turkey. I always want to find an alternative source from the private sector to compare whether the magnitudes make sense. This index is by Raden. Raden is a property research company. They've been around for roughly 15 years and they're completely reliable. Of course, measuring home prices is always risky business. Even the Case-Shiller Home Price Index in the United States probably has implicit mistakes or biases which economists try to correct month after month, but that's the nature of the business. But the blue line is the rise in nominal prices between 2010 and 2022. As you see, there's a mild trend of increase in nominal terms, and then along Turkey's inflation rate, it soars starting in 2021. Now, the red line is real home prices, but the chart is somewhat unfortunate. Nominal price increases are so large that the red line is not really very pronounced, but look at that. I mean, uh, between 2020 and 2022, my reading of the real price chart is that home prices increased roughly 50%. So there's both long-term and short-term data suggesting that home price increases are very excessive. And it's going to get worse for several reasons. A, we have a president who believes that the best way to stimulate the economy is to suppress the interest rate all the way to zero. Turkey's latest CPI print was 55% per annum and 3.15% per month. The policy rate of the central bank is 8.5% per annum. So this is extreme real negative interest rate environment. And of course, everybody who can borrow does so because essentially the bank is paying you money to receive loans from it. That's one problem. Secondly, as I've said, these kind of bubbles, whether they are in the housing market or in any other real asset, or in financial assets such as crypto coins or stocks, have a tendency to become self-fulfilling prophecies. As prices increase, newcomers come in, they don't really know anything about the market they're operating in. They're motivated to participate in these price increases and they buy indiscriminately. Eventually, it becomes a Ponzi scheme. I mean, people no longer buy because they think there is still value in this particular financial or real assets. They buy simply they think there would be a greater fool who would take it away from their hands at the higher prices. And you know the Ponzi schemes, the problem with Ponzi schemes. At some time, you run out of foolish people who are willing to participate in this dream, and then the whole pyramid collapses all the way to its foundations. I think Turkey is very close to this situation. I'm sorry, I forgot to add one thing which I mentioned in the beginning, but it's worth recalling. The government estimates that 1.5 million people out of a population of 15 million may have migrated away from the earthquake zone. I don't know how reliable that data is. I think it's much less than that, probably less than a million. But in any case, a large number of people and families are looking for shelter and affordable housing in neighboring cities like Mersin. Antalya is not affordable, it's the tourism heaven of Turkey. Or in larger cities like Eskişehir, Ankara, Izmir, Istanbul, etc., etc. This is also driving home prices higher because suddenly it's like population growth. You have these new people who are going to buy houses and they're probably not very discriminating about the prices they're willing to pay. And then, of course, the earthquake scare after the earthquake in the south. Almost every TV station or YouTube channel is hosting a seismologist, who's a construction engineer or earthquake expert who prophesizes that Istanbul or Izmir will be the next. I think all of these claims have legitimacy in the sense that Istanbul, Izmir, Ankara, the south of country, they are all on active fault lines. But I don't think the science of earthquake prediction has reached the level where we're sure about timing. But anyhow, this has created public anxiety so that in addition to newcomers from the quake zone looking for new housing, people in every city is looking for safe housing, for houses that are built strong enough to withstand huge earthquakes. And that's also creating churning, adding to home prices. Let me show you the chart once again. This one actually is better before I reach conclusions. The central bank chart, I think, is more illustrative of how fast prices have increased. Again, in real terms, house prices increased by 60% in 2022, and in dollar terms, the increase is roughly 80%. And I'm making the prediction that this real estate bubble is on its last legs. It's going to collapse soon. How and why? Well, now let me find my face here. Well, actually, it's easy because Turkey is going to have elections either on May 14th or June 18th, at the end of which there are two options. A, Erdogan will remain in power, or he'll be replaced by an alliance, by an opposition coalition called the National Alliance. The National Alliance has already put out its economic policy proposals. It's going to go back to orthodox monetary policy, which means that interest rates will be at a level to reduce inflation. If we assume Turkey is going to have roughly 50% CPI after the elections, if the opposition takes over, then interest rates would probably be gradually raised to 60% or higher, i.e., we will have real positive rates, which have always been negative for house purchases and house prices. So this is one way the rally will end. Interest rates will be jacked up relatively rapidly, mortgages will become unaffordable, construction loans will become unaffordable, and home prices will collapse. The second option is for Erdogan to remain in power. He's not going to change his economic policies, as a result of which Turkey will experience a balance of payments crisis, probably before the year 2023 ends, simply because Turkey is already running out of FX, hard currencies. The currency is artificially suppressed to lower inflation. Obviously, these are not sustainable policies. Then similar things will happen. Turkish lira will depreciate very rapidly against the American dollar or euro or Japan or Japanese yen. Doesn't really make a difference. Houses would become very cheap in terms of dollar terms, and demand for houses will go down. Will a housing collapse become a permanent drag on Turkish economy? Probably no. The comparisons to China and Japan are fair, but they're probably not permanent for several reasons. A, the share of housing construction or construction in GDP is roughly 7%. I think in China this is something like 25%. The contribution of construction plus real estate activity, as it's broadly defined, in Turkish GDP is probably around 8%. Nowhere as high as China, where it is something like 25, 26%. So even if the construction market collapses, the impact would be severe. It would shave off a couple of percentage points of the GDP, but nowhere as devastating as it would be in China. Moreover, even though Turkish commercial banks have quite significant exposure to both mortgages and construction loans, these are estimated to be no more than 10% of their total loans, whereas, God, in Chinese banks, I don't know, but it looks like half of their assets are somehow related to the housing or commercial property market. There is another difference between Turkey and not China, but countries like United States or UK. All mortgages are at fixed rates here. So even if interest rates increase very rapidly, the interest payments of Turkish households on mortgages will not increase. But there will be a wealth effect. You know how people decide how much they could spend out of their income. Obviously, they want to save some of it for future emergencies or for their retirement needs. And the rule is the higher the total wealth of a person or family, the more they spend out of their current income. And as in China, houses are the primary wealth items for Turkish households. So if home prices decline significantly, then it stands to reason that their propensity to spend out of current income will also decline. As a result, the housing bubble would probably burst sometime late in 2023. It will have a significant impact on GDP, probably lasting about 2 to 3 years, would shave off probably 1 percentage point or 1.5 percentage point from the GDP each year for the next 3 years. It will also have a negative consumption effect because household wealth will decline. That would add to the downward pressures on GDP. I think it's fair to say, in the absence of very accurate data or sufficient number of research articles, Turkish growth rate could be halved for up to 3 years if the housing bubble collapses as I predict. This has been a long video, but I am an expert on Turkey, but I'm also a student of emerging markets, so I wanted to bring in a discussion of Japan and China to this video on Turkish housing market. Thanks for watching me. If you like the content, please subscribe or click the like button so I can reach a broader audience. This is Atilla Yeşilada saying goodbye from Istanbul on account of Real Turkey channel.